This is a Boeing bond. Tony Dwyer, equity guy, is looking at an October 29th Boeing piece, $350 gazillion. The coupon is 3.45%, 67 basis points over treasuries. It's a high-risk market. What does a Boeing issuance like that mean to you in terms of what you do in the stock market?
Well, our asset class strategist, Brian Reynolds, is the one that pointed this out to me. And what we noted was on the day that this bond was issued, there were two tranches. One was $350 million for 10 years. One was for $350 million for 30 years. The initial talk on this was 80 basis points over. The initial look. And it came at 67. Then the indication was 70, and it came at 67.
Give me
That's
the
on
answer.
a horrible day.
This is too complicated. Here's where they think the Treasury is, and they're out at 80 basis points, 0.80 points, and they come in lower because people are bidding for the bond.
There's so much demand for it. So
continue.
The point of that whole thing and what we're talking about off air is, it's hard to have a credit crisis. A recession happens in the U.S. with a credit crisis. It's hard to have a credit crisis without credit stress. Credit stress comes from there's no demand for bonds. So people keep talking about the liquidity crisis, not for Boeing, which is the poster child of an industrial company that could get hurt with trade wars. And yet they're pricing $700 million worth of bonds on a horrible stock day, better than expected. So yes, maybe this is not going to end well. You cannot fix debt with exponentially more debt, especially when rates are going up. Our only point is that it's not time. The credit markets aren't showing you now is the time you want to run for the hills.